Hey everyone, I hope everyone had a great trading day. The portfolio has reached a milestone. We hit that $100,000 mark, and I am super excited to be doing this video with you guys and sharing my progress as the markets continue to rise. The portfolio was up $3,349 today for almost a 4% gain. We almost got there, but towards the end of the trading day, the portfolio sort of sold off. So we reached a high of about 102,000, and the portfolio started to sell off from there. So for the past week, we're going to take a look at some stats very quick. For the past week, up 7%. Past month, I'm up 23%. For the past 3 months, I am up 18%. The past year, I'm up 47%. And my all-time chart shows that I'm up 62%. So if you look at towards the bottom of the screen, just below the chart, you can see that the buying power represents $11,000. And a big reason why that is the way it is because I'm quickly going to talk about some of the companies I currently own. The portfolio has been trimmed significantly because I noticed that once I got to that $100,000 mark, there was only certain companies I really wanted to actually focus on. And I'm going to quickly talk about what those companies are. And that's pretty much why the buying power is up $11,000. So as you guys can see, I don't have many companies in the portfolio. In the previous video, I wanted to focus on probably buying a lot of FANG stocks, but I recently changed my strategy up. And the current strategy right now is to build a massive cash position for the portfolio. So right now, the portfolio has $11,000 worth of cash on the sidelines, and I am focused on increasing that up to about 20%. Right now, that's about 10% worth of my portfolio. That $11,000 is just sitting there for anything that we can buy. If we want to buy Disney, if we want to buy Tesla, it's all there. So we are just sitting that cash on the sidelines and waiting for the next market correction or market crash. So we are ready to buy instantly. So I'm just adding to my buying power, and the companies that we own right now are the companies we just want to focus on currently. So Apple is sitting at $150.92. They recently had an earnings report where the guidance was not good as far as the shipments for iPhones. So the market punished Apple by selling off a little bit, but it's recently recovered from that sell off. My position, I own 100 shares for an average cost of 111, and my total return is up 35%. So I'm doing pretty well with the company. I definitely wish I would have bought it sooner before it did that stock split, but I'm pretty happy with the company's return. I think that Apple, looking back, like all the years that I've owned Apple, it is my favorite stock, guys. You guys know that I love Apple. It is my favorite stock in the stock market. However, the way the portfolio is structured now, I don't really have Apple as a main focus. As you can take a look at the portfolio diversity, it's only sitting at 16%. And I think that might be the third largest in the portfolio currently. But this does pay a dividend. It's a great company, and I will continue to hold. I'll probably hold these shares for a very long time. Next company is NVIDIA at $297, and this has pretty much been the superstar of the portfolio for the last couple of weeks. I have an average cost of 177. I have 100 shares, and the total return is up 67%. And this thing is pretty much shot past the moon. Past month is up 45%. Just in the week alone, it's up almost 20%. So the hot topic on Wall Street seems to be about the keyword metaverse, and companies are talking about incorporating AI into their projects. So a lot of things that the company does with NVIDIA, as far as what they do, is that's where they focus on. They focus on semiconductors, they focus on AI chips, and they focus on artificial intelligence and gaming. So, this one, that seems to be like a hot keyword on Wall Street right now, as far as like you look at companies like Facebook. Facebook has transitioned to Meta. They rebranded their company into Meta, and now that's the hot word. That's the hot word, and this stock has really just shot up to the moon. This stock is probably this and Tesla. This and Tesla have been doing really, really well. Like I said, I'm up 67% for $11,000. It's been the superstar of the portfolio. Portfolio diversity is 33%, so really quite high. But this pretty much is the grower for our portfolio. I'm never gonna probably sell these shares for a long time, and I like the company. So hopefully the company continues to rock it. Microsoft is sitting at $300, $336. Total return today is only up $2, but my total return for the company is $7,798 for average cost of $258. This is the largest position in the portfolio. Microsoft is the clear focus of cloud, and again, there's been some whispers about Microsoft working with Facebook as far as getting Meta started up, because I know Facebook is rebranding themselves and they're doing a lot of different projects. But I think there's been some whispers about Microsoft, and Facebook teaming up and doing some interesting things. And they also had an earnings report not that long ago where they pretty much smashed expectations, which was pretty much expected because they always smash expectations. But their actual EPS was $2.27. So they pretty much crushed expectations, and then the market rewarded the company with a premium. And this is probably the highest this premium has ever been. P ratio is 37. So even then, Microsoft is a phenomenal company that I really, really like. And like I said, I wanted to shift the focus away from Apple, because Apple has always been like the company that we always liked. It was always been the company that I've always owned. And I wanted to shift the focus away from Apple to some of these growth companies so we can get the portfolio to $100,000, which we achieved. So Microsoft continues to rock it, and NVIDIA continues to rock it. And I couldn't be more happier. Seeing those two companies be the growth cornerstones for our portfolio. Starbucks is sitting at $112.14. This was a recent purchase that I did for the portfolio. The average cost at $105. I originally only had 3 stocks in the portfolio, guys. I know I've trimmed back a lot of my companies. I've really been trimming. I've just been trying to build this cash position because, again, I think that the markets are pretty expensive at this time. But we did see Starbucks at 105. They I don't know exactly what happened, but I do know they sold off from their earnings report. But I didn't own the company at that time, so I'm not really sure what was said at the earnings report. But the stock market did not like it, and the company dropped like 8% one day, and I happened to just catch it on my watch list. So when I caught that, I ended up purchasing 100 shares of the company because Starbucks has a simple business model that is very easy to understand. And not that long ago, they recently increased their dividend by, I think it was around 10%. I could be wrong, but they recently increased the dividend by 10%. So this company is like the McDonald's of coffee. I know McDonald's is super overvalued at this time, but I still think Starbucks is a good company. They're diversifying. They're trying to get into China. They're trying to get into international markets. They pay a good dividend. There's been some pretty good growth over the past year, 26%. And this was before the big dip that they'd had, like I'm trying to get the thing to focus here, but 19% at that dip, and for the last 5 years we've been seeing some pretty good growth, 109%. So this is a company that I really like. I really like moving forward. Simple business model. It's easy to understand. It's easy to hold the company and get a dividend out of it. And I think we will be paid $49 quarterly. I could be wrong on that, but last time I checked, I do believe we would get paid $49 quarterly to hold the company. And to hold a company like this is just, you can't really go anywhere in America. Like, it's like a Starbucks on every corner of America right now. So this was a no-brainer when I saw that the market sort of overreacted on that dip towards the earnings report. So we were able to take advantage. We were able to take advantage of that dip, and we're sitting at a $714 gain. So I'm not planning on buying any more shares at this time. We have the position that we really wanted to have, and I'm excited about that. So yeah, so guys, we reached $100,000. I don't want to take any more of you guys' time. I just wanted to do this quick video. We only have 4 companies in the portfolio currently, because again, the focus for the portfolio is to build up a massive cash position for the next correction. And now that we've reached $100,000 in the portfolio, I definitely will try to focus on different projects and really put this Robinhood portfolio on cruise control, because for the last 4 to 5 years, we've just been adding into this portfolio over and over again constantly. And I have other companies that I want to focus on as far as like my Roth IRA with M1 Finance. I definitely want to try to get some more money into that. And I've been focusing on Webull also, because they added Shiba Inu to Webull. I'm not really sure if when exactly I'm going to get into cryptocurrencies, but I'm going to do some things with Webull. I'm going to do some things with M1 Finance, and I'm pretty much done with the Robinhood portfolio. I don't think I'm going to cash out the portfolio. I'm going to still continue to increase our buying power. And I just want to quickly talk about some of the companies that I've been watching. Disney is one of them. I have been watching Disney, even though it's not on my list. I have a separate watch list, guys, so that's why you guys don't see a watch list in Robinhood. But Disney has been pretty much trading sideways ever since March 9th, and it hasn't been growing as much. So I'm thinking that in my head that Disney is expected to move here. I know they have an ER coming up, earnings report. Let's just take a look. So they have an earnings report scheduled on November 9th. So I don't really like buying companies when just right after earnings report. I like to see where the company is at. And this is one of the companies that I'm pretty much looking at, because I think it is at a good price right now. And I think another company I was looking at was Johnson & Johnson. So Johnson & Johnson is on a pretty significant dip right now. I missed that dip where it fell all the way down to about 157. But I still think that that's pretty high for this company. I just wanted to own the company because, again, I'm trying to add some of the dividend players, the high dividend players, into the portfolio so we can get some much needed dividend support. But this is still pretty high, even at $157 where it hit support. I still think that's high, and I don't really plan on buying any shares of Johnson & Johnson unless it actually hits around $130 or so. So, I'm not really going to buy Johnson & Johnson. But again, we have enough money to buy anything we want in the market. But I'm just continuously increase that buying power up, and that'll be that. So, but anyway, I hope everyone had a great trading day. I want to thank you guys for watching, and I also want to give a shout out to all the people who've been following the channel these last 4 to 5 years. It has been a wild ride, but we finally got there, guys. I hope everybody has a great trading day for tomorrow, and I'll see you guys next time.